Welcome to week 29 of my Trading for a Living challenge, where the goal is to make over $1,000 every single week, trading a $125,000 account, which I've recently converted to margin. And if you're brand new to this series, the playlist link is down below, either in the description or in the pinned comment, where I produce weekly videos walking you through how much money I've made for that week, how much time I've actually spent trading in that week. So if you like the sound of that, all I ask for is that you don't forget to subscribe and gently tap that bell notification so that you can get alerted every time I post a new video. So for week 29, you can see here that I again have hit the weekly target, beat it by 9%, so $92 over. And this also signifies another milestone of 2 consecutive weeks since I've started this journey, hitting the overall target. So you can see here, I hit it twice in month 1, once in month 2, once in month 3, once in month 4, once in month 5 and 6, and month 7 also hit it once, but I never hit it from a consecutive back-to-back perspective. So it's a good milestone for me, which I'm really happy with. And there's 2 reasons for that. One is now I'm obviously on margin. So this was the first week I went on margin. And secondly, I'm choosing a longer duration expiration. So I'm collecting more premium upon entry. So if we have a look at how much time I spent, it's about an hour because I've got more trades to manage. I have also placed a new trade in week 29, which I'll go through in this video. And from accumulation perspective, I managed to hold at minus 10%. So brought in just under 27,000 versus just under 30,000 in terms of a 9 to 5, but taking a lot less of my time to do that. In terms of my buying power, at the moment, I've got 167,000 available to trade, and I'm currently have 33% that I've actually got in active positions, which is about right. I think at the best case or worst case scenario was to be around 50%. Don't want to be any more than that in case positions start to go against me. So that's the overview. Fairly happy with where things are. Now what we're going to do, we're going to head over into the trade section so you can see all the trades I've made for week 29, and then we'll head over to the charts to show you why I've placed these kind of changes or positions or adjustments. So what I normally do is I always send you guys or post up the screenshots. So I did it across 2 different days, and so you can see that I'm actually placing these actual trades, and then I've put this in the table format, which is a bit more easier to read. So we have a look at Tesla. Tesla's probably the most complicated position because I've got 3 different positions that are currently open. So I own 300 shares I got signed 300 shares back in week 11 at a strike price of 282.50. Tesla is currently trading at 209. So again, I'm way behind on where I need to be despite its 100% bull run in January. We have a look here. We've also got a short strangle, which is an inverted strangle, which basically means, so we've got a short call at the 120 strike, which is very deep in the money currently. And we have currently open a 170 put, which you can see that the strike is greater than the call strike. Therefore, that creates an inverted strangle. So I went into a lot more detail about that in last week's video. So make sure you check that one out if you want to understand the reasons for doing that. And then what we also have here as well, we also have a short call, a naked call at the 250 strike, where I generated $525 of premium. So if we have a look at each one of these in tandem, of what I did in week 29 is on the short strangle on the put side, it was at 156.67. I decided to buy that back for $762 and move my strike up to 170, generating $1,300, therefore giving me an additional premium of $543. And the reason why I did that, if we head over to the chart, is you can see that Tesla has continued this kind of bull run over the recent weeks, and I've decided to push this strike up at the March 17 expiration. I'm recording this on February the 15th. So I'll be looking to roll this position out in about 5 to 10 days time into the April cycle, looking to move that call up as well to get me further out of the money. So it did pull back slightly, but it started over the last couple of days in week 30 going up on there. So I think where we are at the moment, I'm quite happy with the 170. I'm not planning on changing the 170 strike unless these highs get broken within the next week or so. And as I mentioned earlier, the plan now is to roll the entire short strangle into the April expiration for a credit, where my best case scenario is to stay inverted. But if I can move this call up to the 130 strike or 125 strike and maintain around a 170, 180 mark, then that's my best case scenario. Because again, I want to roll this position for a credit. And then again, we've got the short call here that we talked about all the way up here at 250. Again, I'm quite comfortable with that. I haven't adjusted this position. I could adjust it down to the 240 potentially. But again, we're still up pre-market here at 213. So I don't really want to change this strike as it currently stands. I'm quite happy leaving it there at 250. So then we have Meta, a very similar position to Tesla. I got put stocks on week 10 and week 12 at the 157 and the 155 strike. We also have another inverted strangle on this particular position. So we have a call position at the 105. Meta's trading at 179.48, and then I have a put option at 155. Again, my put option strike is greater than my call strike, therefore creating an inverted strangle. So if I go back to Meta, so you can see what this kind of looks like here. Again, there's my cost basis on my 200 shares. So I'm in the money in my shares, but I can't sell these shares because I got this in the money call here, which is causing me a bit of a problem. You see now Meta has come down, starting to fill this gap it left from earnings. And starting to hit its continued pivot points as well, which is great, which is what you wanted to see. We still have this February pivot here, which is going to be missed. So I'm expecting some movement down. I don't know how long it will take, but I do expect price for Meta still to continue to drop to fill this gap and get closer to this pivot point. So that's what I'm expecting, which is why I don't expect to change my 155 strike in the March cycle unless these highs, or we start testing up these new highs. I will bring this put up again to collect more premium. But as it stands, similar to Tesla, at around 5 to 10 days time, I will look to roll Meta up, roll the call up, keep the put where I can, just to get this thing keep moving upwards. I need to keep moving this up to start trading the price. I might sell a call around the 220 mark, might be the right amount of time to sell that to generate additional premium to offset any potential debit here. But those are things that I'm thinking about what to do as well. So that's my Meta position. Again, not really much to do. Again, just pushing up my put strike, exactly the same with Tesla. AMC, haven't touched it. I actually regret putting this position on, not seeing it's a waste of time. We generate $500. I've got it's a short strangle. So this is a classic short strangle where your put strike is lower than your call strike, unlike Tesla and Meta, where the put strike was above the call strike. And again, we got the 23 call and the 2 put. I'm just going to let this just expire, really, to be honest. I can't see AMC getting down to $2, to be honest. So I feel like I'm in a good place over there. So no changes there. Coinbase, I've got a short call on. And what I did in week 29 is just generated, I did 2 positions, I think, in week 29, actually. Yeah, I rolled down the 120 to the 110, and then I rolled down the 110 to the 105. So as Coinbase did this down move, I decided to roll down my call strike here. So I could probably roll this down a bit more. It's starting to drop back up slightly again at $60. It needs to move 40% to get there. So I might move this down to the 95 strike potentially this week, just to, again, generate some more premium. But again, like with all these positions that are March expiration, I'll be looking to roll these at 21 days out. So it's about 5, 6, 7 days or whatever it is it's going to be. I'll be looking to roll all of these positions out for credits or close down these positions. And lastly, we got Google, which is the brand new trade. Very similar to Base, but instead of on the call side, it's on the put side. So again, I really liked these lows over here. And I think I did it when it was doing this kind of down move section. And then I managed to sell it at the 86 strike, and it's trading currently at 94. So we've got, what's that, about $8 of leeway. And again, I generated $151 in premium for that right to potentially own shares of Google at $86. So you can see here now going on a margin account where traditionally this would be $8,600 of buying power. It's only costing me $1,100, similar to Coinbase, where this will be costing me about $10,000. It's only costing me $1,800. So that is the advantage of going on margin. Yes, there are risks of early assignment, relatively low in my opinion, especially if there's some sort of extrinsic value in the option, then doesn't make sense for the option buyer to actually execute unless you're really deep in the money on Tesla and on there. But I do have shares to cover this, which I will take a loss, which will impact my P&L. But at this point, I'm not too concerned about that process. So I really hope you've enjoyed this. What I'm going to do probably for week 30 is make some minor adjustments on my Meta put and on my Coinbase put to generate more premium. But then I don't really have anything else to do until I do my rolls, which are probably going to happen in week 31. So I might look to place another cheeky trade in there just to try to get $500-600. And very unlikely I'm going to hit my target for week 30, but overall I'm not looking for it consistently. I'm just looking for if I can get to anywhere near 4.1k, which I haven't done so far, right? This is what I'm doing. That's to actually hit my target in June or in the 6 month here. So that's the plan. If you've got any comments, any questions, let me know. If you're interested in the trading strategy, again, I encourage you to go back to week 1 to go check it out, where I talk more and more about the trading strategy that I use. And I shall see you guys in the next video.